Hello guys, my name is ATP and today I'm going to share with you a Forex strategy that gives me close to $20,000 in profit per year, and I'm giving you all the components for free. I'll walk you through the exact indicators and rules, show you the results and explain how you can use this strategy to profit in 2025. Let's get started. Before we dive into the strategy, let me quickly show you the results. As you can see here, since 2013 until 2024, this strategy has made over $200,000 in profit, or an average of $20,000 per year. This is my equity curve and it's been a consistent upward trend. But before showing you the rest of the results, let's break down the strategy itself so you can understand how it works and how you can start using it to make profits just like I did. This trading strategy is designed for the volatility of the Forex markets and it works perfectly on the daily time frame. However, whether you are trading major or minor currency pairs, this strategy is adaptable and can be applied to any time frame. Now let's talk about the indicators you will need to get started with this strategy. I'm going to use TradingView, but you can use another platform if you prefer. I will start by going to the Indicators tab and searching for the UTBot alerts. You can use this one here by QuantDomad. The UTBot, which stands for Ultimate Trend Bot, is a trend-based indicator that uses volatility to produce buy and sell signals, spotting momentum shifts early with minimal noise. For the settings, you should use 2 for the key value and 10. This tool is a trigger indicator from this Forex strategy, which means that it is the one that tells us with precision when to enter in a new trade. For long positions, it is when a buy signal is printed, and for short positions, when a sell signal appears. Now, let's go back to the Indicators tab and search for the basic polychromatic momentum, this one here. The polychromatic momentum is a custom momentum-based indicator that aims to identify trend direction and strength by analyzing recent price movements, spotting bullish or bearish conditions in the market. For the settings, I will use 15 for the length and 6 for the smoothing. This oscillator is the filter from this strategy, which means that it cleans fake signals from the UTBot indicator. The next one is the Guadalajara explosion, this one here. The Guadalajara explosion is a volume-based indicator that measures the strength of a price movement by combining price and volume data. And by doing so, this tool will be the volume indicator for this trading strategy. For the settings, you should insert 80 on the sensitivity, 22 for the fast length EMA, 45 for the slower one, 25 for the Bollinger Band's channel length, and 2 for the multiplier. Now let's add the final indicator you will need for this strategy, which is the T3 MA with ATR bands. This is a custom baseline indicator that I personally developed. It combines a smooth T3 moving average with dynamic ATR based channels. The center line acts as a trend filter, while the upper and lower bands identify potential reversal zones and overextended price action. Although it's not available on TradingView by default, you can download the full version for free on my Discord server. Just click the link in the description, head over to the free materials channel, and there you will find the code and instructions on how to import it into TradingView. This tool can be used both as a baseline and as a trigger, depending on the situation. So let me show you how the full entry system works. For a valid long position, there are 2 different entry methods. The first one happens when the UTBot prints a buy signal. At that moment, we check that the candle closes above the T3 MA line, but remains below the ATR upper band. Then the polychromatic momentum should confirm bullish strength. That means the blue momentum line is above 0 and the histogram is green. Finally, the Guadalajara explosion needs to confirm volume. The volume bar must be green and above the yellow explosion line. If all these rules are aligned, we enter the trade at the close of the signal candle or on the open of the next one. The second method is triggered when price crosses and closes above the T3 MA, but doesn't break above the ATR upper band. In this case, instead of relying on a UT-bot signal, we look for green candles from the UT-bot to confirm bullish momentum. Then we check that the polychromatic momentum and the Water explosion volume confirm bullish bias, just like before. When all conditions match, we enter the trade. And of course, the exact opposite rules apply for valid short positions. That includes the UT-bot sell signals or the cross-under of the baseline, with all the other indicators and conditions aligned. Now let's talk about the stop loss. While you could place it using the most recent swing high or swing low, I recommend a more precise and consistent method using the ATR indicator, this one right here, with the default settings. The ATR, or average true range, gives you a measure of the market's current volatility. All you have to do is take the current ATR value and multiply it by 1.5. That number will give you the ideal distance in pips to place your stop loss, making it dynamic and adapted to each market condition. Now let's move on to the exit points, which are just as important as the entry. There are three possible outcomes that can happen after you enter a trade. The first, of course, is when the stop loss is hit. That's simple and straightforward. The second outcome is related to the take profit. Here's how it works. Once the price reaches a level that is equal to the ATR pip value, the same as the 1 to 0.7 risk-reward zone, you will close 50% of the trade and immediately move your stop loss to the entry point. From that moment on, you will let the second half of the trade run using a dynamic trailing stop. The trailing logic is also based on the ATR. Every time the price moves in our favor, for example, if you are in a long position and the price keeps rising, you adjust the stop loss to a level that is 1.5 times the current ATR value below the close of the most recent candle. And for short trades, you do the opposite. The stop loss follows the market 1.5 ATRs above the latest candle close. This way, you protect your gains while giving the market room to breathe. Finally, the third exit rule uses an additional indicator, the EURUSD, this one here, with a length of 10. It works as a momentum reversal confirmation. If you are in a short trade and the EURUSD indicator gives a bullish crossover signal, you exit the position. And the same applies in reverse. If you are in a long trade and a bearish crossover appears, it's time to close the trade. This exit indicator helps you avoid holding onto trades that have lost momentum. Now that we have covered the full strategy, let's take a look at the performance results. After using this system across the 28 most popular currency pairs, it achieved a win rate of 57.66% with a Sharpe ratio of 3.96, a profit factor of 1.47 and a max drawdown of only 26%, which is very low considering the period of over 10 years. On average, it delivered almost 20% in annual profit with around 80 trades per year, making this the most passive and reliable strategy we use. All of these results were based on 2% risk per trade, using only the daily time frame. If you decide to lower the time frame, say to the 4-hour or even 1 hour, you will naturally get more trades and more opportunities to increase your total profits. If you want to explore the full strategy data in detail, you can download my complete trading journal for free on my website. Just head over to my website, go to the ATP portfolio section and you will find a button to download the full report. Inside, you will see every single trade, equity curves and a summary of all metrics. The last page of the document gives you a complete summary of the strategy's rules. You can apply this strategy manually using TradingView, or if you'd prefer to fully automate it and let a bot do all the work, I've made that possible too. Just head over to algotradepro.com where you'll find everything you need to get started, whether you are a manual trader or looking to run this strategy on autopilot. Now that you know the details, don't waste time. Apply this strategy and take advantage of the potential of the Forex market in 2025. Thank you for watching, and if you found this video helpful, don't forget to like, subscribe and leave any questions in the comments below. I will see you in the next one. Bye bye.